Good morning, and today is Monday, February the 6th, and the time right now in Singapore is 11:38 and in the morning. And of course, we want to take a recap of what happened on Wall Street last Friday. Of course, last Friday we know it's non-farm payroll day, and of course, the market was pretty volatile as to be expected. The market expected about 157,000 new jobs being created. What happened was the market came in with a monstrous reading, more than 500,000 jobs being created. So that created a little bit of confusion in the marketplace because nobody expected such a strong number to be released. After all we have seen before this non-farm payroll, signs of slowing down in the US economy is becoming more evident, but the very strong non-farm payroll number surprised almost everybody. Okay, I for one, am surprised that we have such a strong labor market in the US based on the release of this number from the Bureau of Labor Statistics. Okay, and that caused me to think about whether this reading is it going to be reliable. Okay, so that is my first suspicion that this number does not look very real, because all the numbers prior to this release is suggesting the US economy is slowing down. Okay, we saw it in the manufacturing PMI, we saw the retail sales, and there's nothing to prepare us for such a monstrous non-farm payroll number. Okay, so that caused the market now to rethink. Okay, is the Fed going to, based on this number, have to redouble the rate hikes again? Because this number is something that comes as a big shock, because everybody was expecting less job being created. In fact, they are expecting unemployment rate to start to climb. Okay, so what we have here is not only the unemployment did not climb, it's actually recording the best performance for the last 13 months. Okay, so this is something that is totally out of expectation, and the number of new jobs being created, more than 500,000, which is totally blow everything, all estimates out of water. Okay, so what happened was now the market is beginning to think, based on this very strong labor numbers, the Federal Reserve now hands are being tight. They will have no choice. They cannot even pause right now. There is likely the condition that will cause the Fed to even raise the quantum of the rate hike. That caused everything to started to unravel. So upon the release of the non-farm payroll, we saw equity market started to fall. Okay, it fell until about 11:15 when the services PMI number were released. That one was also a surprise. Prior to Friday release of this services PMI, of course, PMI refers to Purchasing Managers Index, and previously it was 49.6, and this one came in way 55.4, 55.6, which is way out of the market expectation. So it gives hope that the US economy is not that bad after all. Okay, so it was a conflicting set of data causing the market to first come down and then rebound. Okay, but towards the end of closing, market realized that this is totally very confusing. So when you are confused and not sure what the Federal Reserve is going to do, what you normally would do is to take profit. Okay, so exactly this is what happened. Market came back down and closed almost at the opening price. That leaves behind what we call a doji. When you look at the Dow Jones Industrial Average, this is a daily time frame. You can see this doji here. Okay, this is a doji whereby the opening and closing price are the same. That means the market is unsure which way to go. Nobody knows. Okay, including myself. But look at the pattern. The high was traded on Wednesday. Thursday there was Wednesday was that FOMC. Market was very confident the Fed now will have no choice but to take a long pause and maybe even cut rates. Okay, so the market was very buoyant going into the closing on Wednesday after the FOMC, but Thursday we have the BOE and the ECB central banks came in to hike rates, but even after they hike rates, their currency rates started to fall. Okay, and the killer was Friday. So this laid the stage for lower prices going into this week's trading. So beware that we may see the possibility of the market hitting a high. Okay, and that could signify that the market has already topped out. Okay, so we want to watch this move very carefully here. Okay, so the sentiment is also reflected in the S&P 500. But unlike the Dow Jones, S&P 500 managed to go to a new high on Thursday. Now remember, Dow Jones high was traded on Wednesday at upon the release of the FOMC, and this S&P high was traded the day after, even after the BOE and the ECB have hiked rates. Okay, so the market was still very buoyant, and that changes everything on Friday when the non-farm payroll was released. You can see the market closed almost but this is a long-legged shadow doji. This is even more bearish than the doji that we saw in a daily time frame for the Dow Jones. So this is definitely a very what I call bearish development here. So do prepare for lower prices going into this week's trading. Okay. Now, even more bearish was the fact that the Nasdaq 100 Thursday market reacted to the upside. Okay, 12,880, thinking that this is going to continue, and at one stage it does look like it's going to continue higher, but the non-farm payroll came in, and then this is what happened. Okay, market went down, bounced up, closed even below the opening price to create this what we call shooting star. This is an even more bearish development than the S&P 500. So all taken into consideration, this is a three-wave rally, peaks at the level of 1.272%, okay, and we have this development. So there's a very high possibility this rebound from last October low could have already ended on last Thursday at 12,880.98. Okay, so going forward, I think definitely we want to consider trading the downside rather than upside now. Okay, and this morning when we look at the reaction in Asia, Hong Kong opened with a gap down. Hong Kong going into the non-farm payroll was already weak. The high traded was actually fortnight ago, okay, 22,700. The whole of last week, the market did not go higher because it was a shortened week due to the Chinese New Year. And you can see that the market actually come back down. And this morning, it has convincingly broken below the support line that has been in place since last October. So this could be a very serious development. Although right now it's only a three-wave kind of pattern, but the fact that it has taken out this support line should have already given us the red flag to warn us that market could have actually peaked at 22,700 in the Hang Seng. Now, when we look at the Shanghai Composite Index, yes, the market has been struggling to go back into this previous support and resistance. Did not quite make it. The high traded was 3,310, and that was traded on Monday itself. And after the last Monday trade 1 week ago, the market has been trading basically sideways, and this morning we can see prices decidedly are trading lower. So this is the development so far, and the nearest support is about somewhere between 3,224 to 3,212. Okay, so if the market cannot hold at this level, there's very great risk that this is also a three-wave. It did not quite hit the ideal target of 3,300.47, but it is still a three-wave nonetheless. If this market cannot hold, let's say we draw a simple support line here, and if the market cannot hold above this line, then there's every possibility this market will have already peaked. Okay, so that means lower prices going forward. Okay, the only one that actually run against the grain is the Nikkei 225. Nikkei for some reason managed to go higher this morning at 27,821. This is the highest it has ever been for the last 1.5 months, and but by and large you can see that all the previous high were lower than the previous one. So there's every possibility this move here may not be able to surpass the 28,195.69. So if that's the case, then we can see low highs again, and we want then that probably will set the stage for lower prices going forward. Okay, over in the FX market, we can see there's a very clear reversal. Again, based on the non-farm payroll numbers, when the number came in so much more than expected, now the market is thinking the Federal Reserve had to hike rates all over again. And because there was sign that the Federal Reserve has been easing at least the quantum of the rate hike from 75 basis points to 50 basis points in December. And then this month we have 25 basis points. So now with a fantastically strong non-farm payroll number, then market sentiment seems to have shifted, thinking that the Federal Reserve no choice but to increase the quantum of the rate hike. Maybe the next time will be 0.5%. Okay, so again, market right now is thinking that this is going to be what the Federal Reserve is going to do, and that means higher interest rate means higher dollar. So you can see dollar actually rebounded very strong on Friday and been cleared the falling what I call price channel, and now is clearly on the way up. This morning the market continued to edge higher, and there's a possibility the market will continue to go up. Once it clear it has already cleared the first hurdle, 131.57. Okay, this morning obviously have cleared, and then the next target is 134.80. If the market close above 134.80, this opinion about dollar reversing is going to gain more credence. Okay, and we can see across the currency pair, not only is the dollar yen showing sign of going up, we are seeing all the other currencies starting to unravel from the high. 110.33 was a high traded on Thursday, right after the ECB increased interest rates. And now we can see even with the high interest rates, the currencies also did not manage to go higher. It actually went down. It did register a high, okay, a 3.5 months high, but it cannot hold on to it and close somewhere in the middle of the previous day's trading range. And then yet Friday itself, it conclusively traded below the support line here. Okay, so this is setting the stage for even lower price going forward. Okay, Aussie is also under pressure right now. This morning it actually taken out a significant support line. You can see this support line here. If you draw a simple support line, this market has already taken out the support line, and that is laying the stage for much lower prices. And of course, it was not helped by the fact that the gold prices actually collapses on Friday. Market saw a $50 decay in prices on in gold on Friday, and that is big. And of course, Aussie being a commodity currency, very closely correlated to gold prices, is also suffering. So this morning we see the market actually go lower. Okay, and again, this is laying the stage for much lower prices in the days ahead. Okay, so the market can rebound back to somewhere near the 70-cent levels. Look out for reversal signal and try to see if you can sell this thing. I will be looking for levels to sell. Okay, over in the sterling, you can see sterling has not broken out of the rising channel yet, but you can see that over the last 2 days, the big move here is very significant. So if the market can somehow recover back 50% of last Friday's trading movement relative to this morning low, somewhere around 122. I think that will be a great level to consider if you can see a reversal signal on the lower time frame. Take your chance and then put your stop just above the most recent high, which is 124.48. Okay, so do consider this possibility here. Okay, over in dollar CAC, the market did not move very aggressively, not very clear in the daily time frame, but if you look at it from the hourly time frame, you can see that the market has been very robust. Although prices has not been able to clear above the long-term resistance line, but once it do, then of course it will add in the possibility across multiple currency pair, we see dollar gaining strength. So that could be what we are looking for, the confirmation that it's not happening on one currency pair. It's across the board, all the major currency pairs, we can see reversal. Even in the very quiet dollar sing, you can see dollar sing has also managed to recover very aggressively. So normally this is the canary in the coal mine. If the dollar sing have big move like this, it also shows that the dollar is resolutely trading to the upside. Okay, so if there's going to be any pullback, do take the opportunity to see if you can anchor in a long. Okay, long dollar, I mean. Okay, look, a strong dollar is also not conducive for commodity prices, and that obviously is something that we know, the relationship between dollar and, let's say, gold. Okay, strong dollar means lower precious metal prices, and if the dollar is on the retreat, you can see gold prices are charging higher. So now we can see there's a flip here. Okay, so when you see the flip across so many asset class, now we have saw equity index looking like it may has already peaked and may be trading lower in the coming weeks and months. And of course, we see the dollar rate has also becoming also seeing a major reversal. And when you look at this and see that even the commodity prices are also retreating, that lay the stage for sustainable dollar strength going forward. Okay, so as we are seeing this, there's a risk that the market may actually challenge the low for crude oil at $70, which was last traded in mid-December. Okay, so as a market retreat, okay, there is the possibility the market may even challenge the 70 cents. But first, you have to go below $72.45 to give me the confirmation. Right now, it is still too early to call. Okay. Over in gold market, you can see that this is the daily time frame. But if I show you the 1 hour time frame, you can see that this is a massive move to the downside. Market peaks at $1,959.74, and then it paused for a while. This is Thursday's move. Okay, and then this is market move. So in combination, this move here from 1,950 or almost $60 to the low at 1,866 this morning, the market has moved $100 in just 48 hours. So this is huge. Now, when you look at the daily time frame, you can see that gold prices, okay, did break below two support line, and this is major. Okay, for you to break one support line may not seem to be a big deal, but if you break two support line, and this is the more relevant one, and prices right now are trying to get back into the support levels. Okay, so we will see whether it can be done. But anyway, the structure here does look to me has been compromised. So if gold prices can rally back to $1,910, that will be a good level for me to look for levels to sell. Okay, and this move, actually I was looking forward for this week to happen, but it happened towards the end of last week. So the timing wise was a bit too early for me. I was a little bit caught flat-footed, so I didn't enter any trade. Okay, I was looking to sell honestly, but only this week. Okay, but however, it happened last week before the weekend. So now if the market managed to rebound, I'm still very keen to sell, because if I'm right, this decay in gold prices will last all the way until April. So if we're looking at a substantial decline in gold prices, okay, so do watch out for the possibility that precious metals is going to decline. That means the dollar strength may also last all the way until April. So it's going to be a big opportunity for regardless whether you're trading equities or you're trading currencies or whether you're trading commodities, especially gold market. Okay, so over in the silver market, we are also seeing similar move. This is the daily time frame, and we can see this was an outside bar on Thursday, and follow with a massive collapse in prices in silver on the daily time frame. Now when the market is trying to rebound, if the market can go back and test, let's say, the $23.50 level, that will be a great level to position short, because I think the market has already peaked for now. And if gold is likely to decline all the way until April, it may take silver along for that ride. Okay, so do watch out for those two possibilities here. Okay, of course, when interest rate is likely to go higher, that is also a negative for cryptocurrencies, because you can see the correlation between the Nasdaq 100 and crypto. Okay, and Nasdaq looks like it's showing us what we call a shooting star last Friday, and if this result in further decay in equity prices, especially the Nasdaq 100, it may take cryptocurrency along with it. Okay, so watch out for this move here. Now we may be seeing lower crypto prices in the days and weeks ahead. Okay, so Bitcoin managed to go to a high of 24,246. That was traded last Thursday. And over the weekend, we can see softness. This morning, the market continued to go lower. And more importantly, the market has actually taken out a seemingly important support line. So we will have to watch, take this as a guide here. Okay, over in Ethereum, we're also seeing something quite similar. And of course, on Thursday itself, we also saw a high traded at 1,713. 0.84, and then closes as a long-legged shadow doji. Remember, this is a very bearish development, and so far the market has not reacted in any big way yet, but it does lay the stage for lower prices as equity prices started to retrace. Okay, over in Cardano, we can see that Cardano also have a major high, not major high, there was a high, or rather 1.5 month high at 0.414 on Thursday, and then it also closed as something like a long-legged shadow doji, similar to what we saw in Ethereum. So this is definitely not a great development for cryptocurrencies. In Solana, we also see a similar thing. We have seen the market breaks below a support line, and now the market is trading way below that, and the nearest support is somewhere between $22.20 to $20.40. So if this low here cannot hold this suspected retracement, then we may see something quite different. So do watch out for prices across the board, across different asset classes, to do the reversal. Asset prices that have gone up previously now may looks like it may come down, and those that have came down previously may looks to recover. So do watch out that switch in sentiment after the non-farm payroll. This is all I have for you for today. I will hope to give you more updates tomorrow, and in the meantime, take care. Bye-bye.